And welcome on to the Halftime Report. This is Coach Cody. I have myself, Coach Matt, and Coach Noah joining us here in a little bit. Markets are up and a lot of news things going on. Trade tariffs, ECB going negative. Quite a few headlines today, Matt. What are your thoughts?
Where do you want to start? I mean,
we could start anywhere. There's huge event. And oil OPEC came out too.
I think we start with Elizabeth Warren trying to ban fossil fuels.
Let's
start with that. let's not bury the lead here, buddy. No,
through executive order too. Not even I'm going to push within the first 100. No, I'm just going to ban. I'm just going to destroy the economy single-handedly.
I'm going to do
day
it.
One.
I'm going to fix the problem. I'm going to do this, right? All I've heard for 3 years is Elizabeth Warren rail against the dictator Donald Trump, and then she goes out there and says, I'm going to order an executive order on my first day to ban fossil fuels. She might as well said, I'm going to sign an executive order to ban the U.S. economy. That's what she might as well have been saying.
Yeah, that's
it's just utterly insane. And I can see somebody out there in the Twitterverse being like, crude oil down 1.6% on news that Elizabeth Warren is going to ban fossil fuels. And it's like, no, OPEC didn't cut oil.
That's what happened. Yeah, no one cares what Elizabeth Warren is.
No, but I do want to start here with oil because, we were talking about it yesterday, Cody. OPEC was going to come out here today and they were going to meet with both the oil producing countries and the non-oil producing countries. And they wagged the finger a little bit. They yelled at each other a little bit. They blamed each other a little bit, but almost every country within OPEC is outproducing what they're supposed to be doing. And yet no news came out today. No news came out today that they were going to do any degree of cuts out there. And so oil just kind of took it on the chin again.
Supply and demand. Supply and demand right there. Supply is high. It's doing demand. So then the price is going to be forced down. That's just Econ 101. And that's the whole point of OPEC to begin with, is they're supposed to, hey, let's all agree to not overproduce so that, we can keep oil prices high. The problem
I would love to get Coach Mark's take on it today. Does Saudi Arabia really have your back, or does Elizabeth Warren have your back? I want to know who truly has Coach Mark's back, Saudi Arabia or Elizabeth Warren. That's going to be an interesting.
Well, I'm pretty sure the countries in the world now they're all going to be rooting for Elizabeth Warren. Like, yes, you please destroy the U.S. economy.
Yeah, it's Elizabeth Warren. It is not going to happen. Let's take a look at this from a technical perspective. Obviously, on the news yesterday with the slowing global demand coming into 900,000 barrels a day versus what we lowest number since 2011. You saw oil kind of and I'm sure this faked out a lot of traders with that breakout of $57. Comes right back down. Back into neutrality. Coach Noah, how are you doing today, my friend?
Good. I'm feeling fantastic after a reboot. So, hey.
And
was that a mental reboot or a computer reboot? It
might have been.
It was a computer reboot. Mental reboot comes this weekend.
I would like to know what that means.
I don't know yet either. It just means I get to focus on football and other things.
I was going to say, who do the Utes play this weekend is what I was going to ask.
Like Idaho State. Nobody cares about that. I'm going anyway.
No, that's a warm-up game. That's what that is.
Yeah.
Noah, what's your read here on what's going on with the oil? I mean, is there anything really outside just the news headlines?
I think it's just the inventories. I mean, from a technical move, it broke out, and there was a lot of volume on the sell-off. A little uptick in the volume. So, failed breakout. And again, I think if the inventories were if the Saudis didn't cut,
then they didn't.
They didn't. There you go. Now it's selling time.
It's what we've been saying for months and months and months and months with oil. We need to see some type of trend develop here. And when you see some type of trend, maybe that trend develops above 60, maybe it develops under 51. But until it breaks out of this range that we've been seeing over the course of the last 3-4 months, I don't think there's anything to see here other than credit spreads.
And you could see a higher low come in here. And then if that can clear that resistance out there at 58, 59. It might start to establish a look of an uptrend, but
the question is, would you buy that?
Well, I don't have a lot of confidence on oil in general this time of year. Like from my seasonal perspective, I don't expect much out of oil in the third and fourth quarter.
Yeah, that's more natural gas.
Yeah. So, and then again, so you get a natural slowdown in consumption. Cold weather, you'll see formulas shift, and so you do see some interruption in supply and demand there. But Other than that, the economic data, I think if it stays strong, you might see a recovery. But I think that just production, overall net production out of the U.S., I mean,
Well,
we're
good
flooding the
luck with
market
that, with what
oil.
the ECB did today.
Yeah, exactly. And then you're going to see a rate cut, and I see the dollar.
Did all the powerful elites, that secret organization that you always hear about in conspiracy theories, they all make phone calls today and say, "Hey, let's all release negative headlines today." Like actually within a couple hours. Can we please?
Well, I'm not sure they would.
If you were on their Slack channel, you'd probably
does the Illuminati use Slack? Is that the question we're trying to figure out here today? Obviously, market's up a little bit today on a couple of very big news headlines. I want to get your guys' take, have a little discussion on that. First and foremost, Trump delays the increase of tariffs from 25% to 30% that was slated to come in on $250 billion worth of Chinese goods on October 1st. And I don't know, did he say it was just a gesture? I believe he said it was a gesture of goodwill to the Chinese premier, Leo, I believe.
And I think it was also in conjunction with a Chinese holiday right around that date too.
I think it's right on that date.
Yeah, so it was like having the negotiators have to be working and everything. So it really, love him or hate him, to me it does look kind of like a goodwill gesture. Like, hey, extra 2 weeks, y'all have y'all's holiday. We'll talk after. I'm okay with that. I just don't want a deal to get done though, and I'm tired of it getting kicked down the road. But it is another.
That's not going to happen. This is a recycling. It's not the recycling of an old news headline because it is new news, right? But it's par for the course with the trade war we've seen for the last 18 months. It's sometimes we see good news, sometimes we see negative news. On good news, the market goes up. On negative news, the markets in fact go down. So that was the first headline here from the Chinese U.S. trade war. The second one was the ECB, and I wanted to get you guys' take on this because I call him Money Mario because he loves printing money. But Money Mario, on his last act as ECB president, okay, he starts quantitative easing at $20 billion a month coming into the European economy starting in November. Number two, he announces a negative interest rate. Now, in effect, based on their previous quantitative easing, they were already at a negative interest rate, but they further pushed that into negative territory. Their overnight rate that the banks charge the other banks is at negative 5%. Okay, negative 5%. So that was a reduction of 10 basis points, basically. All right. What's your read on what the ECB here? Let's start with Noah.
Well, to me, it's like the little Dutch boy putting his finger in the dike, trying to hold back the water flow there. They're just trying to stave off the inevitable, I think, at this point in time. And, negative rates, everybody's going to end up doing it, I think. But it's like your mom used to say, if your friends jumped off a cliff, would you jump off a cliff too? It's long-term sustainable. It's not a smooth.
How high is the cliff and is the water at the bottom?
Oh yeah. There should be. I mean, I've done that, but to me, the whole question in Europe is not even just a question of economics. It's a question of demographics. They've got an aging population and a shrinking workforce, and they got problems with immigration that they're trying to sort out. And, can they keep that economic engine running? Well, negative rates might keep it going short term, but long term, I think they're holding back tidal forces.
Well, I come back to the Japanese experiment of the 1980s where they tried to pump money into the market to try to maintain their bullish condition of the 1980s. And they overinflated the marketplace, and it caused, 30 years of deflationary period where, they're printing money, trying to just spark inflation, and it just cannot occur. And it just amazes me that central banks from around the world are now using that model as the model of try to increase inflation, when the biggest problem, in my opinion, isn't the amount of money within our system. It's how money is utilized within our system.
Well, and I have to, I'm reading Jim Rickard's book. He talks a little bit more about inflation being a psychological phenomenon, not just a monetary policy phenomenon. It just has to kind of go into that hypersynchronicity is what he calls it. Mm-hmm. And they'll call it a black swan event in the markets, but just where all of a sudden mob psychology takes over. And if inflation will run if that hypersynchronicity occurs psychologically and people stop trusting their currency. Well, going negative, I don't think really bolsters trust. Because
I mean,
money in your bank, you got to pay the bank to hold your money. I mean, that sounds like a bargain.
Yeah, well, like my first response was, you don't save money in money. I've been saying that for years and years and years.
Yeah.
You save money in asset classes. You save money in real estate properties. You save money in land. You save money in precious metals. You save money in stock. You do not save money in money because of where the interest rates
absolutely.
are.
And to me, it feels like, honestly, it feels like your currency becomes the sacrificial lamb. You throw it up on the altar and hope for the best. See if you can appease the economic gods to keep that engine running.
So there's also a convoluted idea of saving your money in debt. And the idea behind it of your debt itself is a set number, whereas the monetary value of whatever you borrowed in is inflation. So you can actually avoid inflation through the debt itself. And to me, that's like playing with fire while carrying gasoline and I don't know, a lot of things.
Well, I'll tell you though, I'd rather save money in debt right now. Because
as a consumer, what about as a nation?
Oh, that's just ridiculous.
Yeah, exactly. And that's what a lot of these policymakers are doing, is they're trying to do it as a nation. Now, possibly as a individual, it is obviously, I'm not advocating for it. You need to understand what I'm talking about before you would try to do this. But as a nation, no, never do it.
Most nations around the world, and most central banks around the world are, parting with the modern monetary theory that we've been seeing play out over the last 10 years. And this experiment that we've seen in negative yields around the world, this experiment that we've seen with, the debt explosion around the world around the last 10 years, it is not working out. It's not. I truly do believe the biggest problem is the imbalance of money supply between the consumers and the elites around the world. Because when the elites have the money, they have a tendency to hoard the money. They do stock buyback programs, increasing dividend. They put it in asset classes that really don't impact the economy, but impacts their own personal valuations. But when the money supply rate is like 70 to 30, where 30% of the populace, 70% of the populace controls 30% of the supply of money, we know what people do with money. What do people do with money?
Which people are we talking about again? Masses?
The masses.
They spend it.
And as they spend it, it creates velocity to money, which has a tendency to trickle up to the elite through actual economic progress and economic expansion and so on and so forth. So this experiment that the central banks have done around the world over the last 10 years, it's been the destruction of currencies from around the world. And you're going to see this play out even worse in the future. Like I said, when you start an interest rate cycle, it's not one time, it's over time, right? And when the ECB goes to a negative 0.5%, what does that force the US central bank to do? Well, it doesn't force it, but what are they going to do now? They're going to continue to drop, which forces the Europeans to continue to drop, which forces the Japanese to continue to drop. And so I just feel like this is going to continue to transpire over the course of the next 2, 3, 4 years. So if we're going to see every central bank around the world go into these negative type territories, where do you think the markets go in that environment? And where do you think precious metals go in that environment?
I think it all goes up because it just, like you said, Matt, it separates the haves and the have-nots. If you own assets, you benefit. If you don't own assets, you're getting priced out of everything.
Mm-hmm.
And so it does further that divide. But I think your gold's going to go up, but also your stocks are going to go up. And eventually the stock bubble will burst. Real estate markets will correct. But at what point in time? I mean, they keep pouring gas on the fire with the negative rates. How do you fight it?
You fight it with this instrument right here.
That's right.
That's what you fight it with. Look at what's been happening to gold on this weekly trend. Sometimes we get so caught up in the daily type price action and we start overreading this daily price action. When you drop the gold chart into a weekly chart, what's your read on this, Noah? From just a purely technical perspective, outside the economics, outside the monetary, purely technical read on this chart.
beautiful pullback, beautiful momentum up with a small pullback down, buy the dip.
And what that means, guys, when you're looking at this momentum, look at when we see the gold reversal down here. When you saw the double bottom, it broke out of resistance here. You have a leg up that goes from 1200 up until about 1330. So it moves up about 130 points before it corrects back down into about 1275. And then from 1275, it drives up 290 points up into the 1560 areas before it starts fading back down. That's an identification of increasing trend momentum. And when we see increasing trend momentum, Noah, what typically happens to the next leg?
Well, you typically see another run. So you'll see a nice little pullback, you'll see a reversal back up, and you'll see prices run up. So
I also want to add to this. There's a psychological I'm trying to think of the way to put it, but basically you end up getting a bias based on the price of something. And then you think like, oh, well, I remember when gold was this price. So it becomes harder and harder to, buy, but that's not the way you need to be looking at it. You need to be looking at this as just a chart. If this chart was gold at $600 right now, people would be like, oh my God, let me buy right now, because look what it's going to do. But because it's at 1,500, people get that stop of like, wait, but it's 1,500.
They do.
It's like, but look at the pattern. What's the pattern doing? What's the market doing?
Isn't that the opposite though approach? Because if gold was at 600, I mean, the level of things economically and monetary that for gold to go to 600 don't exist.
I know, but that's what I'm saying. The price values that we lock in our head.
I know. We always want to pay cheaper prices. Everybody always wants to pay cheaper prices. They always want to pay. They always look back and they say, I wish I would have bought gold at 1,300, when they're not reading the chart. It's not about
that's my point.
You pay. It's not about the price you pay. It's about the value you receive. And that's Warren Buffett 101. And so when you're looking at this chart, and Jimbo asked, is there an Elliott wave in there somewhere? Yes,
absolutely.
There is an Elliott wave in. If you're reading this from an Elliott wave perspective, this is wave 1, wave 2, wave 3, and you're starting to come into the correction of wave 4.
I bet you there's a fib in there too. And we have three fib lovers on this.
Since we don't have Tim here,
we can draw lines on the chart that would make us feel really good about buying it.
Oh yeah, look at that. You got a fib line right there, smack dab into the 38 to 50% retracement. You got another fib. Let's draw this next fib on the way up. You're kissing 23.6. Now I'm going to tell you right now, I don't see this as a retracement. I see these more as flag-based patterns when they're coming down into the 23%. Those are buyable, by the way. Absolutely 100%. The true, your Goldilocks retracement comes down into the 38%, and then you see a next leg up. And if you get that 38% retracement on the next leg up, then you typically see it coming into this 1,700 level, because in wave when you're going into wave 3, according to Elliott wave, this is the longest of the wave counts, right? So if you're wave counting, you go wave 1, wave 2, wave 3, entering into wave 4, projecting into wave 5. And since typically wave 3 is the longest, you see wave 5 go into very similar to what we've seen in wave 1. And in wave 1, we saw that 130 point expansion. So let's say we do get that retracement to 1450, you should see it coming back up into the 1600 type area. If you see it at the 23%, you should see it coming into that 1650 to 1700 level. So absolutely, we should have another leg.
Yeah, you also hit like what you just mentioned there, Matt, is the wave 3 is the biggest, and wave 5 tends to be the same size as wave 1.
Typically.
So if you look at that, if you measure wave 1, did you get 161.8% extension off of it? So if you do a Fibonacci extension.
Let's go to the Fibonacci extension here, and I'm willing to bet you got close to it, Noah.
You're if you pull back down to your start point, and you'll hit that 2618.
There's the 261, but if you come down to the retracement,
right in that ballpark,
you hit the 100% and then 161. Yep.
This is a pretty Fibonacci type movement in gold we're seeing here. I'd love to get Tim's take on it.
He'd say, "Oh, that's all gobbledygook. I don't buy it."
I was actually saying, put the other fib back on the long leg for me, the one that you had a second ago.
Which one?
Not the extension, just the regular fib.
Regular fib.
Yep, from there to there. And then I love how back in June and July, you see how those wicks across 50, they're just bouncing so perfectly against every one of those lines. And all you did was draw the top and the bottom. Like it fits so beautifully to the fib that I don't understand how people rag on this. I don't.
Well, the problem is it's variable. The algos run it. Like a lot of the algorithms run these types of programs, and the trading, I think becomes a built-in expectation. But the problem with it is it's variable. It's not that you can't anticipate it.
It's not to the penny.
You just don't know which one you're going to get.
Yeah.
So,
I do agree with the anti-Elliott wave, anti-Fibonacci type people that it is not as consistent as it once was, right?
I agree with that.
It was more consistent before we had algorithms. And yes, algorithms do use your percentage movements and whatnot, but they're primarily driven through moving averages and those types of things. But there are instruments that still use it. And I just feel like, and this is the argument I've had with Tim many, many, many times, I just feel like wave counting and Fibonacci's in conjunction with wave counting is just another tool in your pouch. That's kind of how I see it.
Matt,
right?
Back it out to a weekly time frame.
Well, we are on a weekly right now.
Oh, are you? Squeeze in a little more history. If you missed the low, if you draw it on the low, like the shadow
right there. Yeah.
Or that first one, that one right there, you'll hit it like spot on if you do the projection. Like it's nails. So every once in a while, when I find an instrument that behaves well, then I'll actually rely a little bit more on the projection.
Yeah, that's kind of me too.
You have to see the personality in the stock, I think, in order for it to be, viable. And I do agree. You draw enough lines on a chart, you hit something.
Well, and I mean, we always tell that joke, right? I mean, that's just the joke technicians tell is you draw enough lines, you're going to find something. But I think if the evidence leads to a conclusion, right? And I think the evidence here leads to a conclusion that this should have another leg up based on everything we're seeing, not only from an economic and a monetary perspective, gold being the safe haven and every central bank around the world literally losing their mind right now. But in terms of just the actual technical analysis here, it's pretty consistent here. And I'm going to trust what I see on that chart far more than what I read in the news. Correct?
Absolutely.
All right. I do want to get you guys to take on a couple other things. First and foremost, the Russell 2000, guys. What's going on here?
It is the first time it's decided to scare my condors to the upside. That's what it is.
No, the S&P 500 is up 1% so far this week. Okay. Another good week in the markets. Dow's up 7 straight days, right? We just broke out late last week, and we've seen the continuation. We saw some high bases in the market break out. We're approaching the all-time highs. We'll come back to the S&P here in a second. But the Russell 2000 is up 5% this week. Are we seeing a rotation here? Is this rotation real? And is it going to lead to something in the future?
So what I've seen, and this is just kind of what I've observed, and maybe my observation is correct. I've seen a lot of money coming out of growth stocks. The forecast, the stocks that are really basing their price and valuation off of forecasted growth. I've seen money come out of those, sharp sell-offs out of those, and then I'm seeing money go into a lot of the smaller, mid cap stocks. I'm seeing it into energy. You're seeing it into more value, based stocks, not just your growth stocks. So, you take a look at stuff like Chipotle, sells off hard. They got a little negative news, but that's just an example of like a growth stock that's dropping back. McDonald's took a hit on that news. A lot of the card carriers, they just saw a deep sell-off. And then in the meantime, you're seeing a big rise on the Russell. And money's coming out of some parts of the market, and I definitely see it going in here because that is a pretty, spectacular move for the Russell.
It almost feels like the Wall Street traders and the algorithms have stopped chasing the yield in the growth companies.
Right.
Right.
They're trying to get to more stable baseline companies.
Things with a lower PE ratio, it seems like there's a rotation from the strength to the weakness in the market, right? Because that does happen. I mean, the Russell 2000 is not going to underperform the rest of the market forever, right?
Well, and the timing is really critical here because this is the time of year you see sector rotation. Like for sure, that's one of the reasons you see that historical dip in October. It's because when institutions are deciding what they're doing heading into fourth quarter, you got your fiscal year coming up here. You got, a consistent little pattern in the market where money, between September and October, you typically see a sector rotation. Mm-hmm. And so that's why you'll see dips in the S&P and you'll see dips in certain indexes. And then if the optimism's there and they forecast a good fourth quarter, you'll see the markets continue to rise. But this is one of those things I'm always looking for, is where's the money moving? And this is where sector rotation and the newsletter are so handy, because you can see where, I was pretty bearish on energy, but it is kicked back in on the bottom. All of a sudden healthcare has come to life. We've been talking about utilities being strong for a while now. So I don't know if it's going to break that 1600 without a pullback.
I was just going to say the exact same thing.
Yep. It's a little overextended in the short term, but I'll tell you what, it's certainly forcing me to adjust the condors. I've rolled my bottom legs up. I haven't broken or rolled up and out yet, but it's going to force that hand if it breaks out.
Well, and if it does break out, and we're looking at that 1600, obviously we had the failed breakout right here, but I still think that breakout's at 1600 with the slight edge at 16, somewhere around 1617, 1618. I agree with you. I just don't feel like we're going to have the strength to break out here in the short term. It's a very, very impressive move in the Russell this week. There's no doubt about that. Really strong day yesterday, really strong day the day before. But now you're coming into resistance areas. When you were seeing the breakouts here, breaking out, there was not a whole lot of resistance over here. And now you're starting to get into those resistance areas at 1580, as you saw over here and as you saw over here. And then obviously we have that significant whole number at 16. So I wouldn't be too aggressive in managing the bear call side if you're in the cash flow condors, but keep an eye on how 1600 plays. Keep an eye on what we see over the course of next week. I would expect to see a little bit of a pullback or a little bit of a high base type scenario. Flag, high base, pullback, something along those lines.
You get a breakout or a pullback, maybe you throw on a small debit spread or something to hedge. Just to give you some bullish delta to offset that. But I agree.
Like a bull call spread, something along those
something like that. Just enough delta to offset your bearish delta. But I might wait for a pullback, like that could turn into a cup and handle type scenario. Or I just agree with your setup. I think it's overextended into the resistance to try a breakout now.
Yeah. Okay. Let's move on very quickly. Let's take a look at natural gas here. No, give me your technical read on natural gas.
I like the bull pullback. Nice little bullish pullback into that after the nice increase in momentum. Notice the uptick in volume, and then the selling pressure. The volume's dropping back down.
No, what does volume mean when we're talking about leg ups versus leg downs, right?
Yep.
So you have your wave up, which is what we're seeing here. That's a wave up, and now you're starting to see a little bit of a wave down. How does volume play a role in your analysis as the markets are moving up versus when they're contracting back down?
It took me a long time to wrap my head around volume, but it's just participation. You got prices running on increased volume. Yeah, it means you have increased buying and selling. And I think in this case, it's giving you that bullish bias, that bullish sentiment. You'll notice as it tops out, the volume kind of spikes out there near the highs. And then as prices are selling off, you're seeing the volume dip back down to typical. So today's volume is early in the session and it's typical, but after, peaking out at the top, that's profit taking. So you had nice participation on the run up, not heavy participation on the sell off. That means that, in my opinion, just means you're seeing some people taking profits. And I always like to look for that confirmation back up after I see that run up on the chart pattern coupled with that kind of volume pattern. That to me is textbook retracement.
Mm-hmm. And what I like about it here, you have all these traders, all these institutions, all these hedge funds, they're participating in the buy side here, right? Mm-hmm. They're buy. And then as it comes back down, not everybody locks in profit. Not everybody on the buy side now locking in profit. And so that less participation on the sell side gives you a little bit of more confidence as you're coming back into the market here. I kind of see this as a little bit of a short-term flag, maybe a high base type forming, maybe a retracement, a true little, retracement start forming as well. But it certainly should be on absolutely everybody's watch list out there. No doubt about that. One stock in the news today, Oracle. Oracle reports earnings. Noah, before we get your technical read here, let me give you some numbers and some headlines from Oracle, and then let's have a little discussion about it. CEO Mark Hurd is having a leave of absence due to medical reasons. No other reason, just medical reasons. At least that's what was said. Oracle reports 81 cents per share versus the expectation of 81 cents. Revenue came in line at 9.2 versus 9.3, so a slight decrease in revenue and a slight downgrade on future guidance. Noah, not great news on the earnings.
Not great news. I took a little volatility play on that and benefited from the drop back and nice little volatility crush on it. But I think that shifts the sentiment a little bit more bearish, lower high, some negative news, lowered guidance, uncertainty around who's CEO, et cetera, et cetera. I would anticipate more selling.
I would agree with that as well. I mean, it's not good when a CEO leaves, regardless of what that reason is, right? That's not good. Number two, when you miss on revenue and you have a miss on guidance, that's just not going to recover in the short term. Obviously, the market sold on it. This, to me, in Oracle is just a stay away from a trader's environment. There's much, much, much better technical setups out there. And as we get close to rapid fire, we're going to play rapid fire here today. So get those stocks in the chat so that we can start doing rapid fire, because we have a little bit of a lag. I want to get one stock on your mind today. Just give me one stock. Let's start with Coach Cody. Cody, give me one stock that's on your mind today.
Stock that is on my mind today, I'm going to go with Procter & Gamble.
PG?
PG. Because in all of the things that we're hearing all over the place, Procter & Gamble being a staple in the market, doesn't matter whether the markets have been down, what's Procter & Gamble done? Followed its trend line. Markets are up, followed its trend line. This thing has been a very consistent staple in the market, hence it's in the staple sector. That is very easy to look at. Yesterday, when it got that nice, or 2 days ago, dropped down to its 20-day moving average. Yesterday, popped right above it. I like it. Perfect retracement for me. I like PG long-term.
Also threatening a breakout to the all-time high of 123.43. So keep an eye on that as well. If you missed out on the confirmation yesterday, you missed out on the gap out today, you do have a re-trigger above that 123.43. So keep an eye on that. Noah, give me one stock, one commodity, one currency, one something that's on your mind today.
I'm with Jimbo. We looked at this chart in the lounge this
morning. You guys stole mine.
Baba. I like Baba.
That was mine as well.
Baba on a breakout.
You can't have the same one, Matt.
You can't have it. So, the
beautiful thing about being a trader is we can all have the same one.
All have the same setup. That's the beauty.
Okay, we can all make the same trade, but not on this show. You gotta pick a different one.
Nope, that was mine too. I was prepared to rock and roll about a whole thing on Baba, but I want to get Noah's take on it.
Well, I like the technical setup. It's got a really pretty ascending triangle, knocking on that resistance door, clean triggers, clean exit criteria. The volume's kind of waning a little bit as you're hitting that resistance. That's typical. Like you see, kind of people waiting to see if it breaks out. You got, pretty decent, I think, optimism coming out of trade deals and deals with China. And then again, the Amazon of the East, go Baba.
Well, when you look at this, when you have increasing support versus horizontal resistance, that is some degree of wedge, some degree of ascending triangle, some degree of cup and handle, however you want to technically call that, that is still a positive thing coming into that. And what I love about this is I hate long runs into the breakout. It just drives me absolutely crazy. Look at this long run into the breakout. Look at that long run into the breakout. And so you have your cup, you have your handle, and it still made that long run into the breakout, came right back down, smacked into your trend line, and then drove back up. That is an ascending triangle breakout. And that to me is a beautiful, beautiful type of chart. Now, when we're looking left to the chart, obviously you have a target right there at 189. to 190. That would be the obvious target, with the second target at 195. Stop loss obviously would have to be under some degree of 180. However you want to play that. If you wanted to get it under the trend line and take a little bit more risk, I would have it right underneath the breakout channel. But that to me is the trade setup of the day. Okay. Personally, I would wait for confirmation on this. And I told that to Cody earlier today. What about you, Noah?
We talked about doing debit spreads on this in the lounge this morning. We talked about a broken wing butterfly on it to bring the cost base down. You should wait for confirmation, but me and my itchy trader finger, I sometimes don't practice what I preach.
I pulled the gun early on a support bounce on silver 2 days ago.
Well, I think that's why I have to actually start doing this, Wall Street priest with confessionals, so I can start confessing my own sins as a trader before the breakout.
Yeah, we do it all the time. We do it all the time.
I have personally not a lot of fear buying on like a cup and handle setup. I actually don't mind pulling the trigger early because if it fails, I'm that much closer to my exit. So I don't.
Well, you'll take a 50-50 shot at a good return to risk.
Yeah. When I get into something like this, though, I sell things. I don't buy. I would sell puts against this. I'd sell spreads.
I can understand it. I can understand the put spread.
Sell a credit spread to help
pay for a debit
spread. Just throw.
I can be wrong on a credit spread and not lose money.
Hold on. People missed out on a gem from Noah.
Sell a credit spread to pay for a debit spread.
That's the gem.
There you go.
That's the gem right there. Jimbo says, how do you draw Fibonacci on a BABA? You don't draw Fibonacci's in neutrality. Fibonacci's are wave counting technical conditions. And so you need a bullish uptrend, bearish downtrend, something along those lines. But let's get into rapid fire, everybody. Get your stocks out there. And let's start with Louis from GE. And I'm going to go youngest to oldest here, Cody. And you are the youngest here. Let's go.
Is that me?
Electric.
Okay. All right.
GE. On General Electric.
GE. So I know it's had some news headlines recently. Not sure what's going on there. Looks like they're trying to get some turnaround, different management try to take over. That's what they had that little pop on over the past week, but it's smacking its head right into that 50-day moving average. It did get through the 9, which was a resistance level. So for this, I'm not going to touch it because it I don't know where it could go. It could hit off the 50 and come back down. It can break through the 9. It can come down to the 9 and retrace. Right now, we don't know what GE is doing. So
I think it's too deep. I think it's too deep of a retracement to kind of.
That's what I'm saying. For the bearish side, it's too much.
$9 was the trigger on the bear side, and that failed. So moving on, let's go into Coach Matt. Let's go MCD McDonald's here. McDonald's here just kind of got beat up on that on the news, the acquisition stuff we saw on Monday. It's trying to recover. I remember Cody asking me yesterday, what's my take on McDonald's, and what did I say, Cody? I can understand somebody taking this as an overreaction, correct?
Yep,
I completely understand that. But as a trader, that to me is not for me. I need a clean technical setup, and I just don't see a clean technical setup on the buy side. I'm not looking to short McDonald's. That's just not going to happen. But from a buy side mechanic, I need to see a breakout at 221. That's what I need to see. I need to see it recover here. I'm going to be patient here on McDonald's. Let it recover. You're going to have a better technical setup in the future. Bob, Noah, Coach Noah, let's go with Bob. He's looking at Halliburton for a potential short play. Give me your read.
Oh, so back up above the moving average, below the moving average. The whole sector looks like this. And I personally still have some bearish plays on some of the sector.
So do I.
And I've been kind of enduring this rally, being like, okay, if price of oil drops, maybe you see the energy stocks drop down. This one, I'd want to see it break down below Mark's girlfriend, the 9, like get it back down there. And I think, what do you got, 20 and 50 there?
I got the 20 and the 50. I'll add the 9.
Maybe go with the 20 signal, same difference. Yeah. You need to see a breakdown below that. And then
I'll tell you, I was short Halliburton throughout this movement here, and it was more position, not swing, and had a stop loss right above this little intraday here, I got stopped out on Monday is where I got stopped out of, but I'm looking to refire here. Maybe not.
Well, see, what I did is I had long puts for the previous breakdown, and then I sold puts against it as it rose up, and then I pulled my shorts off. So I still have the long puts. So rather than stop out and reload, I kept my original long puts and just waiting for them.
I got out when it got up Monday, but again, I'm not buying the entire recovery of the energy sector yet. I just
not
don't
yet
buy that argument yet.
I think there's still going to be a major inventory issue, which will keep prices low on oil, which means those profit margins are real slim.
Yeah, energy's not going to be profitable as long as oil stays under pressure.
Yep, absolutely.
So I'm looking to actually reload here on some of these energy stocks. Obviously, we got to see them the technical setup get a little better.
Jimbo, I pulled my shorts off. That could be really easily misinterpreted. Yes.
Yes, it could. It could. Are you wearing shorts right now? Is the question.
All right, well, I'm gonna jump in here, guys, and let's move on to the next stock. SMG.
Is it SMG? Yep, Scott's Miracle Grow here. SMG.
All right, so good news and bad news on this one. Good news is if you took the trigger yesterday, then you're very happy. Bad news is if it is breaking down right now, but I think 100 is its next major support level that it's already pushing into. So good news is if you made the trade, you're happy. Bad news is that 100 might hold. Look for another retracement and break of 200 or of 100 to continue.
Yeah, if that breaks, they'll watch out below.
Yes, yeah, we need to break 100
below. But yeah, it's you want to trigger above 100, but under 100 you certainly could. Let's.
I got a dad joke that's really brewing up in there. Is Scott?
Oh, where is it?
Is it
Scott's Miracle Grow?
Is it a growth stock?
Growth stock.
Sector rotation.
There we go. No,
I mean we could also make a joke on seasonality. We're heading into winter here, and things don't grow in winter.
Don't forget to fertilize in the fall.
I'll wait for you guys to get done.
Hey, this is why people come.
No, they're here for the humor. The stock analysis is secondary.
Kroger, what the high wave candlestick?
Now you can't see it.
On that thing, earnings.
Look at that earnings.
It was earnings related. Woo. I haven't seen their earnings report, but it does look they came in slightly above. They have to have a mixed earnings report. If they came in slightly above EPS, but they have that type of range candle, I mean, from 24 all the way to 26.77.
That looks like a Fed chair gave that earnings release.
It looks like
enough lingo to make it go up and down.
Yep, it looked like ECB made that announcement on Kroger. Is there anything to see here on no? I mean,
I don't know what you do with that, quite frankly. I mean, you could take it intraday and maybe day trade that, but that when you see high wave candles like that,
why day trade?
No.
Why?
See, that's a Forex news announcement right there. Is what that is.
That's exactly
that's what that looks like.
Yes. You want to see that Forex news announcement?
Oh yeah, that.
And I'm trying to wrap my head around the euro rallying on negative rates. I'm really trying to wrap my head around the euro rallying here.
Cody asked the same question in our pre-production, and I said, Cody, these spoiled little whiny Wall Street type traders out of the European side of the equation. I've said it before, I'll say it again. They're the most socialistic organizations around the world. And they wanted something, right? They wanted 30 billion in quantitative easing every month. That's what they wanted. But what they got was only 20 billion in new quantitative easing. And so because they only got 20 billion versus 30 billion, it's like, and Cody, I said, Cody, what does that remind you of? And Cody says, what'd you say, Cody?
I said, it's like the spoiled kid on Christmas. Like, you got me an iPhone 8. I wanted a 10. Why do you hate me, Mom?
Yes, that's exactly what he said. That's exactly how he said it. And that's the analogy. It's a little boy at Christmas, little girl at Christmas. They have their expectation for whatever they want, and then they don't get what they want. And even though you
got something really nice.
Oh, you spent a ton of money giving your kids an amazing Christmas, and all of a sudden they're like, "Really, Dad? Really? I only got an iPad. I didn't get the iPad Pro." Right. It's the whiny little traders, these socialistic traders who just want free money, want a free monetary environment. They wanted 30 billion and they only got $20 billion. So that's why
socialistic capitalist. You got
socialistic capitalist. It's absolutely amazing. Let's take a look real quick at FCX. This is on me. Looking at FCX, let's definitely take it off the 30-minute chart because I was like, I might buy that right now on the 30-minute chart. Looking at the daily chart here gives you a different read here. You're overextended. And when I'm looking at Freeport here, this is obviously a copper mining company. It's a company I really like as well. I hope it does recover. But that chart to me looks a lot like the General Electric chart to me. It was looking at a potential short here around $10, got above that $10 range. And now let's see if this truly is a reversal. I'm hoping it is a reversal. It's a great covered call stock. It's a great naked put stock. And obviously copper's been one of those only precious metals. It's more of an industrial metal, but one of the only ones that has not, been on the bullish side of the equation.
Well, I was going to ask you, Matt, copper in China go hand in hand.
Yeah, 100%.
This is getting some news-based movement, in my opinion, off of the China trade deal. Positive news out of China is positive news for copper. Positive news for copper is positive news for Freeport McMoran.
Listen, when that Chinese-U.S. trade deal is finally done, right? Copper and Freeport are going to be an amazing buy.
Yes, they are.
Right?
Agreed.
I'm going to wait. Because
I'll wait for that first retracement.
I'm not even going to wait for that. I'm going to wait till after the trade deal is over. That's what I'm going to wait for.
Signed paper, done, and
no, I don't care that somebody in China and somebody in the U.S. say positive things about one another.
That's what I'm saying. It's signed. Like it is printed.
The deal done. Right? Okay. Deal signed. And they both hold up that black little book with their signatures on it. And they say, they just show it around for the press to take back. That's when I'm going to buy copper and copper related stocks, when I see the ink on the paper. But I'm not going to chase it here. You're absolutely right. It's news driven right now, but I'm not buying it. Next, let's go ahead and look at Shopify, and let's go with Coach Noah.
This one, the sell-off, the volume on the sell-offs has me spooked. It violated the moving average a little bit, and the recovery today is a little weak. I'd like to see it back up above the 20-period moving average, because I don't have a lot of confidence. Whenever you see a sell-off that hard down into a support zone, I expect another drop out of it. Well, maybe a buyer down at a lower price, but
can't you see short traders on a very overvalued company coming in and shorting at the 20?
As soon as it gets back to 375,
you're assuming it even gets that high.
Yeah, exactly.
Today's doji, it might just fail and drop from here.
Well, that's why it's so important to recover those moving averages, because that's where we're trained, guys. Every trader is trained, and we're trained on when things are reversing, we're going to sell it as it hits the 20-day moving average. Right.
It's also why you don't counter trend trade it, because you're going to have people start selling it early, and if you're counter trend trading, you're hoping
terrible discussion yesterday. Yes.
Hey, listen, I contrarian. Yeah, I've been a contrarian once or twice. It usually just costs me money.
Yes, I have. We've all done that. Cody, let's go on to Weibull.
Weibull, I think you skipped Billy, but I'll take Weibull. Weibull looks like it's starting to reverse. It is up. I would like a little bit more of a deeper retracement to get in that thing, but I can see some recovery here from the bottoms.
Left shoulder, head, right shoulder. Break out of the 45 horizontal trend line. You now have a higher high, forming a high base. Maybe it retraces. We've seen this on.
Matt's frozen. I think what he was going to say is,
I wasn't sure if it was Matt or if it was my internet.
Little pullback. I think the volume picture is really interesting on this one. You got a nice increase in volume on the breakout, and of course, Matt can't move his cursor. But hey, you're back. Matt's back.
He's back.
Awesome.
There we go. Okay.
Now he's just changing charts. There we go.
Yep. Billy. You read now.
This chart looks about as skiwampus as their logo. Like, look at that logo up there.
That's a good analysis right there.
Huh. Interesting. I get nothing out of this. This type of thing just gives me like whipsaw. I have no idea what to do with it.
What does this company do?
I don't know.
Losing money. They're losing money and they're whipsawing crazy. I don't know much about it.
They got a cool little logo right there, though. Maybe we should buy it for that reason alone. Twitter, TWTR, Twitter here. I'll take Twitter. Twitter forming a bullish retracement. You can see it come down, retest the old resistance level right here. It's retracing back down. You see it forming a little bit of a U shape. That's showing you slowing momentum in this retracement here. We also have a reduction in participation, as we talked about earlier, for something like this, I would like to drop it down into a 30-minute time frame to see where that trigger would be. And it's a tough trigger because you got that tick here above 44, but I'm looking at that 43.75. Maybe the conservative trader says, let me close above 44, but that looks like a bullish retracement ready to start running again.
Alrighty. What else we got?
ENPH. Last one, ENPH, and let's go. Since you had an Oscar-worthy acting job on The Spoiled Child, I'll give you the end here.
I like to thank my family. I'd like to thank. Okay, I see a bearish engulfing candle after it broke down through the 50. I see this thing continuing to the downside. It did have a big movement on a lot of volume today. I'd look in the intraday to see if I could find a better entry point.
There's got to be news here.
There's something there, but yeah, that's a bearish engulfing candle on big volume breaking below a major support level.
Yeah, that's institutional selling.
Lots going on.
Watch out below here is what I would say. Cody?
All right, take us out. I have to say, guys, first, while we're here, I need you to just pick up your phone, and from your phone, while I'm talking right now, I'll wait. Go to Instagram, Tackle Trading Instagram. I was told because of the way that Instagram's set up, I need you guys to vote from your phone, not from the web browsers, on your phone. Go vote for the stock that you want us to analyze. We have Fox, TripAdvisor, or EA Games. So between those, which, I mean, they each have very interesting charts. So go take a vote on what you guys want to see on your phone right now. Won't take you but 2 seconds. Just open up the app. I know you all have Instagram. Vote real quick. Second thing I have to say is need you to go over to Instagram and go through the comments and comment on the type of trades you guys like to do and would like to see us teach a little bit more of. So the two things we need you to do on our Instagram page is A, vote for what you want to see stock-wise, and then just let us know what type of strategy you want to see next. And those two things, if you can do that, I'd be happy.
And let me just say one thing about Instagram. Our social media individual, her name is Jessica Marino, and she's one of us. She's a trader. She was trained down. I actually mentored her many years ago. And Jessica does such a wonderful job putting the amazing, the look and feel of all of our great content, right? So if you enjoy the content that Tackle puts out, let's go ahead and go support Jessica because that's important to her on Instagram. So definitely go pick the stock of the week and make a comment in the comment section on what you want us to teach more of, and that's going to help us determine the type of content we put out there. So let's go out there and support that hashtag Team Tackle. What do we got here tonight, Cody?
Tonight's Thursday Night Cash Flow Club. I believe it's Gino on that one.
Yeah, I think it is Gino.
I believe it is Gino, and of course, all of you. Typically, when we ask guys to suggest, we usually get a couple students that all say more of Gino Poor. So if you wanted Gino Poor, you got him tonight. So get over there. Make sure you watch that, guys. And actually, I have one last question. Matt, what's going on with your hat right now?
It's Utah Jazz.
Utah Jazz? Okay, because, I mean, normally you got an Eagles hat on, which I hate. So for the first time, I think I'm actually enjoying it.
I might go buy a Redskins hat just to upset you.
Why?
Yeah, I'm gonna rock the Eagles. I might even go get a G-Man hat just to upset you.
No.
But I obviously I do like the Eagles, but I'm a Miami Dolphin fan, but their hats are the worst hats in the history of mankind, and I'm just not going to rock their gear this year because they're tanking for Tua. But number two,
tanking for Tua. That's the first time I've heard that, but that's smart.
Tanking for Tua.
I like it.
But the Utah Jazz, watch out for the Utah Jazz this year. I love their team this year. It's going to be a blood in the water in the West this year. But I love their chances.
Matt, Noah, who do y'all got on fantasy coming in this week? It is Thursday, so we do have this week starting.
Well, I haven't set my lineup. I better go do that.
By the way, Noah, you shouldn't do it. You didn't set your lineup last week either, and you still won.
Well, it's because I had pretty decent draft picks, and I had Dak. Dak was lighting it up.
Oh, Dak killed it last week.
Dak did.
He threw the perfect game, didn't he?
Between him and Lamar Jackson, they competed. I think they were depending on your scoring your league, they were number 1 and number 2 last week, which I actually benched Jackson for Baker Mayfield last week. So that killed me.
That was a mistake, but I would have done the exact same thing.
Oh my
Maybe
God.
I won it because that's how bad Miami is. That is how bad they are.
Exactly. Yeah, and I should have. But although I did go and make sure I picked up a handful of New England wideouts, so just to destroy Miami.
All right. Well, for those of you interested in fantasy, and Mark, I was just going to give an update on that. Mark did survive death ball.
He did.
But just barely.
He did his sacrificial lamb to the fantasy gods. He did his little manipulation, and that's what we love about old Coach Mark is he is going to do whatever he can to win the day, and he did whatever he could to win the day. So no, Mark is still in the running in death. We
lost our very beloved head of women in trading, Coach Emily
Murray.
She auto drafted though. To her credit, she was on auto draft
in a two quarterback league, right? In death ball where you need quarterbacks. She got auto drafted, and the auto draft did not pick her a quarterback. Okay, but that should show you how bad Mark did. But he barely beat it.
Yeah, that's true. Mark was there, and not only there, he was like bragging that we were all going to get eliminated, and he was just going to be laughing, and we all saw the comedy in it that he was right on the edge.
Oh, and Mark's biggest fear in all of this, if he would have got beat out in week 1 when there were multiple teams that did not draft a quarterback, he would have lived that for the rest of his life.
Yes, he would have. Yes, he would have.
Like the scarlet letter, he would have wore that on his chest. So yes, Mark did survive, and we'll give you an update in the Tackle Death Ball League every single week because we think it's fun.
And we gotta have a little bit of fun. What's going on with the podcast fantasy league?
Oh, the Trading Justice Podcast Fantasy League. I'll just give you a quick update. Jonathan, who is a mentor student of mine, and he is in the Trading Justice Fantasy League. Jonathan got beat down by me, is what happened. That's the only update you need. And so I know he's going to be watching this later on today, and I hope he finishes it because I actually have a session with him at 4:00 today. So I'm going to be meeting with him online later today, and I'm going to have some bragging rights before we get into looking at his swing trade. So that's going to be interesting. But yeah, we'll keep you updated on the Trading Justice podcast each week. We'll keep you updated on the tackle one. But for those, it is, Joel. It is. That's what I think it is as well. But guys, thank you so much for being the best part of tackle trading. We got scatter reports tomorrow as well, and I'm going to be running that scatter report meeting. So I'm excited. I'm excited to go through the entire market tomorrow. And I'll tell you guys, whenever I'm on the road traveling for Legacy, the one thing I miss is my family. That's number one. But the second thing I miss is hanging out with the tackle trading bird dogs every Friday for 3 hours as we navigate the entire markets, rank everything, and just have awesome discussions. Some of them with some choice and colorful language, I will say. It's a ball hanging out with the entire crew every Friday. So I look forward to that. You guys enjoy Gino with Cash Flow Club tonight, and we'll be back on tomorrow with the three of us for the halftime report. Like and share, everybody. Like and share. We were supposed to say that at the first, but we forgot.
We weren't. We're getting terrible at this.
No, we get in here. We just want to.
Tim just like does the corralling part for everyone. He's the family guy.
He's had an entire life of corralling me and Mark. He's very, very good at it. So guys, you're the best, Team Tackle. We'll see you tomorrow.